is, at that price, the cheapest multiple on forward earnings you've been able to buy Nvidia since before ChatGPT. So it's just this astonishing thing where, in plain sight, Amazon rallied, Alphabet rallied, AMD, Broadcom, one after another. They just took off, and this thing was just look at this. Is there another one of these that's hiding in plain sight as you look over your current?
New highs for the S&P, new highs for the NASDAQ. The Dow has retaken 50,000 yet again. NASDAQ's on pace for its 7th positive week in a row. It is the first time it's done that since October of 2024. Let's begin with the tech trade for obvious reasons. Nvidia, for obvious reasons. That new record high today. You did have that Reuters report. The U.S. has cleared the H200 chip sales to 10 firms. May not be entirely new, but we are learning names. And as Jensen Huang is in China, we're wondering what he might come back with. Are they going to be able to sell those chips there as he wants? The street remains optimistic. UBS has taken the price target to 275. Cantor goes to 350. So there is a lot of optimism for a stock that everybody here owns. You get the first shot at this because it's one of your largest positions. Yeah. It's so good to have you in the house. It doesn't happen that often, if ever. So we're so happy to have you. What should we make of what Nvidia is doing and what Jensen Huang could bring home on this trip?
Well, I mean, the most unusual thing is Nvidia didn't do anything for 6 months as the rest of the semiconductor trade, really catapulted to new highs. So over 6 months, remember, Nvidia hit $210 a share about 6.5 months ago, and it was flat over that period of time. Yeah. And so, as our largest holding, it's almost 20% of our overall portfolio. But it's actually been a drag from a performance perspective up until recently. On the March 30th low, I think it hit 170 or 172 bucks a share. And so the catch up here really hasn't been about China at all, Scott. And by the way, China's de minimis at this point to Nvidia. They've announced $1 trillion over the course of the next 6 to 8 quarters of demand on Blackwell's and now Vera Rubin's. And so this is a little bit of icing on top of the cake to be able to sell their older H200s, to China. I don't think that's what's moving the stock. They're going to report earnings next week, and I think what's moving the stock is everybody's looking at the entire complex and saying the most important company globally in AI, the best company executing today in AI is Nvidia. Why is it trading at 14 or 15 times fully taxed GAAP earnings when the rest of the complex is trading much higher?
What's so crazy is this stock sat at 180 for 6 months.
Yes.
Anyone who wanted it could have had it.
For sure.
And
all right, now let's welcome in the former Dallas Fed president, Jefferies senior advisor, Richard Fisher. It's good to have you back, and I think it's just perfect that you're following what Steve and I have just talked about. If you're the professor here, what grade would you give Chair Powell, given the enormity of what he had to deal with?
Well, I'm very fond of the chairman. I think he's done a good job. I'd give him an A. But I'd give him an A particularly for what Steve is going to talk about tomorrow, and that is handling the politics the way he went on television on that Sunday night, how he has fended off the intrusion of the political authorities into the business of the Fed. And there are 2 historical precedents. Just to follow up on your comment, Scott, when Truman appointed McChesney Martin in 1951, he made him swear to God that he would cut rates. He did not. And Truman started attacking him. He used a Trumpism, which was that he was a traitor to the United States, et cetera, et cetera. And then when Lyndon Johnson was president, McChesney Martin was still the Fed chairman, the longest serving ever. And he took him to his ranch and physically beat him up. And then, of course, Martin gave in. My boys are dying in Vietnam, said the president, and Martin cut rates. Well, Martin confided to his friends. He was going to his deathbed ashamed of himself. And he felt he started the great inflation. So this is the 3rd chairman that has to deal with a very aggressive president. I think he's handled it well, and I think he should be honored as such.
I'm sure there are no doubt people watching who would say, how can you give him an A? You may think he did well, but how could you give him an A when he made the admitted transitory mistake, the continued mortgage bond buying, which was excessive, and then being late to start raising rates? Don't we need to take any points off of the scorecard there?
Okay. I think, Scott, it's a good point. I'd give him an A-. Now, I think it's important to realize that it's not an easy job. And I think Steve just put on the scorecard pretty good scores. Second best or first best, depends on where they are. But we're going to also see what is going to happen going forward. And I think the important thing was to keep an even keel, conduct yourself with dignity. On that sense, I would give him an A or an A minus. The transitory inflation thing, I remember telling Chairman Powell, I'm transitory, you're transitory. I expect to live another 20 years. I don't buy that argument. So that's one mistake. That's the big mistake he's known for. He regrets it, and he's corrected for it.
Yeah. What do you make of him staying around? Does that do anything to impact his legacy? Should he just ride off into the sunset, content with what all he's done and achieved?
I have a different view of that than I think anybody else. He is giving cover to Kevin Warsh by staying by, because Kevin may be under enormous pressure to.
Hey, so welcome back to my channel. I hope you're doing well today. So without wasting time, let's start our video. Nvidia sent a Wall Street a message nobody expected. For years, Nvidia's story has been simple. Build the best AI chips, sell every chips you can make, and generate a mountain of cash, and repeat. But this week, Nvidia made a move that suggests the company may be thinking much bigger than most investors realize. Despite sitting on one of the strongest balance sheet in a corporate America and generating staggering amount of cash flow, Nvidia announced a massive bond offering. The immediate reaction from many investors was obvious. Why would a company drawing into a cash to need to borrow tens of billions of dollars? The answer may be revealed where Nvidia believes the AI industry is headed next. Because this isn't about the needing money, it's about creating optionality. The company could easily fund its operational without any raising a single dollar. Its cash generation alone is extraordinary. Yet Nvidia chose to enter the debt market anyway. That tells you management may be preparing for a future where financial flexibility becomes a competitive advantage. Think about what is happening across the AI ecosystem. Every major player is racing to secure investment, secure infrastructure. Cloud providers are expanding capacity. Startups are raising record amount of capital. Model developers are demanding more compute, and data center operators are building as fast as possible. And every participant is competing for the same limited resources. In that environment, capital matters, relationship matters, and the ability to finance partners may matter even more. That's why some analysts believe the Nvidia bond sales isn't really about the Nvidia. It's about the ecosystem. The company has increasingly become a center of AI economy. When AI startups need funding, Nvidia often participates. When infrastructure providers need hardware, Nvidia gets benefit. When model developer expands, then Nvidia wins. The company isn't just selling the GPUs anymore. It's helping to build the entire industry around them. And that's required a different level of financial sophistication. What's fascinating is that this comes at the time when Nvidia valuation remains surprisingly reasonable compared to its growth profile. For years, investors assumed that Nvidia would eventually trade at premium multiple forever. Instead, earning growth has expanded so quickly that valuation has compressed dramatically. Today, many analysts argue that Nvidia is trading closer to a mature company than a business still growing at extraordinary rates. That's the one reason why some investors continue viewing it as one of the most attractive opportunities in artificial intelligence. Meanwhile, the fundamental backdrop remains incredibly strong. The world still doesn't have enough compute. That reality hasn't changed. Every week brings a new evidence that demand continues exceeding supply. New AI models require more resources, new applications need more resources, new agents require more resources, and increasingly the consumer AI is beginning to join the party. This is important because next wave of AI adoption may look very different from the first. The first wave was about training the models, and next wave is about deploying from everywhere. Into the smartphones, into the laptops, into the enterprise's workflow, into the robotics, into the automation system, into the every product category that can benefit from the intelligence. And once those systems are deployed, inferences become like the key driver. Inferences where AI create value, it's where the user interact with the models, it's where the business generate revenue, and it's where the compute demand scale with adoption.